Even with rock-bottom interest rates on savings, many baby boomers, they have been very gun-shy about seeking higher rates of return. And, of course, that could complicate their own retirement plans. Well, my next guest is focused on providing some of those solutions. Joining us now for a CEO sit-down is Gary Bhojwani. He is the head of Allianz Life Insurance Company of North America. Gary, thanks so much for coming in. Good to have you.
Thanks for having me.
Explain a little bit about a recent survey that you put together that really underscores a lot of the fear and anxiety that many investors have about their future.
Okay. We contracted with a third party in 2010 to conduct a survey of just baby boomers, approximately 3,200 boomers, aged roughly 44 to 75. And we had them ask the boomers about 130 questions, give or take, and then we did a refresh on that study again in 2011. And as an example, one of the questions we had them ask was, we gave boomers a choice. Would you rather take a product that gives you 4% guaranteed rate of return, or a product that gives you up to 8% rate of return but subjects you to market risk? And both years, roughly 80% of the respondents chose the 4% guarantee. Now, in 2010, that may not have seemed that surprising given everything we went through in 08 and 09, but to us it was a pretty big surprise to see that again in 2011 despite the market run-up, and we think it's indicative of a fundamental shift that's taking place right now with how boomers are thinking about money and frankly what they're most concerned about.
They're concerned about their future and the fact that they may not have the kind of money they thought they had in order to live the retirement they want.
I think that's absolutely correct, and I want to be very careful about saying this time is different, but I believe that this time is different for one very simple reason. If we compare the events of 08 and 09 to prior corrections or crashes, what's different this time is the boomers don't have time anymore. In 2000, they still had time. The front end of the boomers are turning 65 this year. They don't have 10 years to make it back. They don't have a choice but to handle this differently. And we're really seeing that come through in survey results and, frankly, in sales results as well.
Is this because the focus is not just on how much money am I going to have, it's on how am I going to meet the financial obligations that I already know exist?
I think that's exactly what it is, with one slight modification. It's not even so much that they're thinking about obligations. They just want to know they're not going to run out of money. And in Western society, and in America in particular, if you think about the way retirement's been thought of over the last 70 years, basically the time since World War II, we've thought about it as a three-legged stool. A third coming from your government, Social Security, a third coming from your employer, pensions, and a third from your own investments. And for the first 50 years or so after World War II, that model worked great. But some things have changed in the last 20 or 30 years. In particular, pensions are not offered very often in this country anymore.
The defined benefit plan is basically gone for most corporations.
Absolutely. And if you look at government programs, just based on sheer demographics, we believe the eligibility age is going to go up and or the benefit level is going to come down. And that's not a Republican-Democrat thing. That's a math thing. In 1950, there were 16 people putting money into Social Security for every one taking it out. In 2005, that ratio is down to 3 to 1, and in 2025, that ratio is down to 2 to 1.
And indeed, the taxes on those Social Security payments, they are also increasing. And what are you expecting? Anywhere from maybe $1,700 to, if you're lucky, $2,500 a month, depending upon the kind of Social Security you draw.
Absolutely. So when you look at all the factors, and again, if you think of that three-legged stool model, the pension leg doesn't exist really anymore. If we think about your own investments, that leg, we saw, if we look at the peak to trough, 07 to 09, there was a 40% loss overnight. And then finally, if we look at what's going on with the third leg, the government leg, I think even the biggest supporters will tell you some changes are coming. So understandably, boomers are realizing they need to take some of these matters into their own hands, and they're concerned.
So what have you found that they are doing, or what kinds of products and services are you offering to take advantage of the fact that they want certainty?
The biggest thing that they want is to know that they're not going to run out of income for as long as they live. So stated differently, they need to cover longevity risk because they don't know.
Keep thinking annuities here. I mean, this is the big word, right?
Well, absolutely. That's exactly what it is for us. And annuities are the only products out there that can pool risk and ensure that all of the people that buy an annuity don't run out of money, whether they live 10 years, 30 years, or 50 years into their retirement.
All right. I want to thank you very much, Gary Bhojwani, Chief Executive, Allianz Insurance North America. Keep us updated on this very important topic. Thank you very much.
Thanks for having me.
All right.